In today's video, let's discuss one key metric of Palantir's that is particularly interesting, and it shows just how they stack up compared to competitors. If you want to support this channel further and become an exclusive community member, you can do so in two ways. You can either become a YouTube member, and doing that will give you exclusive perks depending on which tier you pick, or you can become a Patreon member. If you decide to do that, you will get access to a Discord community where you can chat with myself and like-minded other investors every single day. On top of that, you will get live buy and sells every time I make any moves inside my portfolio and weekly portfolio updates. I'll leave links to all of that in the description below. I saw this post on Eich from Jeremy. I think it's originally from Arnie. And what you can see is revenue per employee. And you can see that for Palantir, ServiceNow, and Salesforce. I'm going to explain exactly what you're looking at. And we're also going to look at a chart that actually was in the letter to shareholders from Alex Karp in the Q3 earnings that also fits into all of this. But just even if you don't know anything about revenue per employee, what you can see is that Palantir's revenue per employee is increasing. That's number one. And you can also see that it's a lot higher than the two other companies that are shown on this image. It's higher than ServiceNow and Salesforce. So let's just quickly discuss what actually is revenue per employee. So it's a financial metric, and it's used to measure the average revenue generated per full-time employee. It's calculated using this formula here, where you take the total company's revenue and you divide that by the number of full-time employees. As investors, we ideally want the revenue per employee to be as high as possible, as this means there is increased shareholder value. And this is because a higher RPE, revenue per employee, I'm fed up of saying that already, so we're going to abbreviate it. Higher RPE indicates that each employee is basically able to generate more revenue for the company. This can then eventually translate into higher profitability, as the company can earn more money from each employee's output. Now, it's not a guaranteed way of having higher profitability. There are many factors that come into that, of course, but it can indicate that that's the direction the company's going in. And it also indicates that the employees within the company are productive. And remember, as investors investing into a company like Palantir, we actually are owning a part of that business. So we need to look at this like we are the CEO of the business. And actually, we would want the employees to be as productive as possible, because ultimately that's going to help grow the business. It is worth pointing out though that the RPE is impacted by many factors, including the industry. Now in this image, Palantir, like I said, is being compared to Salesforce and ServiceNow. Both of these companies are software companies, but you can see that actually Palantir has significantly higher revenues per employee. And like we were just saying, that can be indicative of high employee productivity and a lean business model compared to its peers. For a long time, one of the main bearish remarks and concerns about Palantir was that it was just a consultancy company. It was an AI imposter. They weren't a true software-based company. But if you actually look at these numbers and you also take the margins that Palantir have, that really helps give context into how Palantir is not just a consultancy company. And actually they are a software as a service business. And they're actually doing better than a lot of these other software companies that they may be competing with in terms of revenue per employee. We also saw this metric referenced in Alex Karp's letter to shareholders during the Q3 earnings. So he actually decided that this was bullish enough and important enough to include in his letter. So let's just have a look here. Here you go. This point here, we continue to do more with less. The revenue we are generating per employee has nearly doubled in the past 4 years. Our engineers have built our software platforms, and it is those platforms that are now driving the value that we as a company create. At the end of Q3 2019, we had 2,358 employees. That's a really small business when you compare this to some of Palantir's competitors, or you just extrapolate into the tech industry in particular. We keep saying that Palantir is a very new company. It's newly publicly traded. It has a very small amount of employees, and actually it's very, very small in terms of its market cap right now too. And that had generated $705 million in revenue on a trailing 12-month basis, representing nearly $299,000 in revenue per employee. So that was in 2019. 4 years later, by the end of Q3 2023, we had a total of 3,810 employees, still not that many, still under 5K, and had generated $2.13 billion in revenue on a trailing 12-month basis, representing almost over $500,000 in revenue per employee. And then you can see this chart here. You can see how the revenue per employee on a trailing 12-month basis, and again, it's in the thousands, is growing. I mean, there's been dips, of course, look here, but overall, it's trending upwards. And Alex Karp then went on to say, the sharp rise in the productive capacity of our company is a reflection of the increasing strength of our software products, whose development only continues to accelerate. So now let's just discuss what exactly this means and why this is important for us investors. The first 2 points are the ones that we've already discussed, and that is that the employees are being productive. That can then lead on to higher profitability. And the second point is that Palantir are obviously very competitive in this area in generating more revenue per employee than a lot of their peers. On top of that, it shows us that Palantir most likely have really tried to optimize their operations. There are a few companies in this world, Tesla being one of them, who really optimize their production lines and their factories. We know that, and that obviously leads on to higher margins, lower costs for the consumer, etc., etc. But there are other companies that are just the business that they run actually shows us that they probably are really optimizing behind the scenes. What does Palantir do every day? Well, they make businesses more efficient and more effective by utilizing their data and utilizing AI to make better decisions, better business decisions, to increase productivity. So obviously, Palantir are going to be doing this for themselves as well. I am sure they are automating routine tasks as much as they possibly can. I'm sure they are integrating AI in order to increase their efficiencies and their productivities. I'm sure that they're constantly improving and looking at ways to actually enhance their workflows. And this all means that they can then generate more money per employee. That is amazing, because then they are technically having to pay less employees in terms of a salary, in terms of stock-based compensation, which has been a whole deal with Palantir as it is, and they can still generate the same, if not more, output. So why else have they managed to get such a high RPE? Well, it might just be the industry and the type of products that they are actually offering. As a software company, once Palantir have actually developed their products, their pieces of software, their platforms, the cost to scale these to more users or more clients is actually relatively low compared to the revenue potential that they have. And this scalability can actually lead to higher RPEs as the consumer base grows. And like we alluded to earlier, just by operating a software as a service business naturally has higher profit margins. That means that Palantir are actually keeping more of the money that they're generating. This again shows up in this metric. But then we have to ask ourselves, okay, well, Palantir are a software company, maybe they just tend to have higher RPs, but then when you compare their RPs compared to some of their competitors that are also software companies, Palantir is still winning. Why is that? Well, maybe this just comes down to who they are hiring. Alongside how they might be operating for efficiencies better than other businesses, they may just be hiring the right talent. We actually heard a few days ago an interview that an ex-Palantir employee did with Joe Longsdale. And during that interview, he did say that one of the highlights from his time at Palantir, one thing that he took away, is how good they are at hiring the right talent. And not only that, but actually putting that talent to the right tasks, using that talent's abilities for the right things. If you are good at managing your staff and putting them where they need to be at the right times, you will get more money from them in return. And maybe some of Palantir's competitors are just simply not hiring the right people at the right time, and maybe they're not making the best use of those talents. Two more things that may be leading to Palantir having a higher RPE. These are market expansion and client retention. So let's just cover market expansion first. Palantir have been gaining a lot of new contracts. I think they can gain even more, and I think they will in 2024, but even so, they have been gaining new contracts, and some of these contracts, quite a number of them actually, are really high value government and defense contracts. This can significantly boost Palantir's revenue without actually proportionately increasing the number of employees. And then we have client retention. We have seen how much of a sticky business Palantir really is. And we've seen just how good they are at not only retaining contracts, but expanding them and growing them into future contracts. We've seen this very recently with the Fujitsu contract that recently came out. That was an expansion to an existing contract. and expansion to utilize AIP, which is of course growing amazingly right now. And again, if Palantir are able to increase their revenue without increasing the headcount of employees, that will lead to more revenue per employee. It's all these little things that I'm learning as time goes on that makes me even more convicted into this company for the long term. I will continue to do my best to share everything I'm learning with you guys. But if you want even more about Palantir, like I was saying at the beginning of the video, consider joining the Patreon community and come and chat to myself and other Palantir investors every single day on Discord. Thank you so much for watching this video, and I'll be back shortly with another.